Good morning, guys. Welcome to this Thursday, April 16th. And we got a market which is holding their gains to the upside. So yesterday was a breakout day. Made new highs. And from starting off this week after the talks failed over the weekend, and it looked like we gapped down. It looked pretty gnarly to get started, and the market has absolutely turned around. And everyone's looking past the whole conflict right now. 3 days, we are back up making new highs again. And it is nothing but spectacular. So if you were not in the market, if you're sitting on the sidelines, sold everything, and to find another low to get in, you just missed everything. That's the risk when you invest or try to trade the market and you're trying to be too cute about it. I learned that lesson a few times. So on the investing side, on the longer term stuff, I just kind of sit through the troughs. If anything, you maybe start considering getting some options involved to protect downside. But anyway, a little sidetrack there. We are on the upside. We are taking out the highs. We are holding on to the gains on the ES at least. Looking at buying a weakness to get started. I was just pulling up the news here for today. The news this morning is 8:30. We have jobless claims and Philly Fed manufacturing. Industrial production at 9:15, and that's about it. So 8:30, 9:15, we have news. I don't think any of it's going to make a huge difference unless it's a big surprise. But I think the big question for us today is really, are they going to hold this or are they going to knock it right back down again? So running stops outside the obvious. In the bigger picture is what's happened so far. If we get continuation to the upside today, that really starts a rally. That really can kick things off. If they can't quite do it and then get knocked down into this lower range again, then it was the probe to the upside, and we still need some digestion for this to keep going. It is moved pretty hard, pretty fast. So I would not be surprised if that happens, but I'm not going to necessarily predict that happening either. Market is what's driving it right now. They're looking past the conflict. We have earnings coming out, and earnings are looking pretty good. So it's a good an earnings season, which looks like they're expecting some good numbers, and the market is just back in the risk-on kind of mode. So looking to buy weakness against the 7,060s, 50s, down to the 40s. I would say below the 40s, I would take off the long bias, go back more range bound, but not until they take out the 30s down here. That would be halfway down. Well, let's do it the 60 to 20s, 15s. It's going to be this lower support area. So 7,015s. That would be taking out that lower range. I have 20 on this range. A little bit lower, it's going to take out this lower end. And that 7,015 comes out. I think we are probably heading back in that lower range again. So I would still be looking to buy. I would start by looking to buy against these support areas, at least to get started. Watching it, if they start taking out that 7,040s, I would be a little bit less aggressive on it. If they take out the 15s, okay, I'm taking out the long bias, going back more range bound, expecting a rotation down here, maybe even some weakness. But it's with this kind of rally, I mean, it's anyone's guess what's going to happen. Usually, when it rallies hard like this, you get at least a couple of pause days, a pause day, or maybe even a retracement day. But I thought that when the first run up here, and the ceasefire run up, that would be the day which, okay, after the weekend, they would retrace that, given that everything fell apart or it looked like it fell apart. But it's market just did just the opposite. So it's just how to trade what you see, right? But I mean, you can explain what's going on. Now we know a little bit more what happened over the weekend and what the earnings, and especially the earnings coming out. So we got tailwinds, we got stuff going for us, and the fact that most people are looking for a way of wrapping it up now, and it may take a little bit longer, but I don't think we end up in that same situation, full blown shooting going on. I don't think that's going to happen, and I don't think it's going to just be over super quick. They're probably going to go back and forth a bit, but either way, market is looking past the whole thing. So stay on the long side. I'm not going to be the only short we really have in front of us is going to be the 7,075 to 80s here, higher the session overnight. And I would just do that with a lot of caution. Not going to be super aggressive on the short side at all. I'm favoring the long side. So if anything, I'm looking to buy pullbacks. Now, big caveat, you saw what happened in the morning yesterday. When they started taking this higher, everybody, if you don't pay attention, and I wasn't on a couple of occasions, they ran it higher and then they just hammer it. And you have to be as cautious about that one that on the pullbacks. I mean, okay, you'll be wrong on once on it if you're trying to get in or you're trying to get on the pullback, and they just keep going. You'll be wrong once on that thing, and you'll end up getting stopped out. But it's the key there is not to stay wrong, not to try to re-engage it. If it starts doing that, just wait for it to shake out, if that's what you're going to do, and then re-engage it after that craziness stops. That was a classic shakeout move yesterday, and it's easy enough. You get blindsided by the momentum to the upside, and you just want to you don't want to miss out, so you get a little bit too aggressive. You get caught in that rundown, and you can saw on the ES how hard they ran that lower, and this doesn't even matter if you bought it at the open. They ran it right through that, and then some. On the Nasdaq. On the Nasdaq, and managed to get up above the resistance area. They stalled right in the resistance at 340s yesterday. Overnight is above that, so we have a shot at staying here and keeping this momentum going. Again, same exact story there. Are they going to be able to hold it or not? Key question. I'm going to start from the long side, looking to buy down to this the 300. So looking to buy against that 370 and the 300s for rotations up. If it starts trading below the 300s, I'm taking out the long bias. Maybe buying against the 215s if that's one level below the obvious, if the typical NASDAQ fashion to run it a little bit further than you think. But it's pretty much changing the bias if the 26,300 comes out and looking at the moves to the retracement here to the downside. So we can get down into this. It's not like it's a crazy move until they take out the 26,000. We really have still a good shot of taking this higher. But if you knock down past this upper edge, that means that I don't think you're going to see that crazy continuation to the upside again, at least today. But it's anyone's guess if they're going to knock it down hard or if they're going to just try to take this higher. We'll just trade what we see, and if we just look for take the little bit conservative approach to buy against the 360s, the 300s, maybe down to the 200, 215s here for rotations up. Below that one, go back range bound, start thinking more range bound trading. If they trade below that 26,000 down here at the lower end, yeah, bets are off. Then they're trading down below this area, and that would be too much of a retracement for this momentum to keep going at that point. But it is when it's volatile like this, they can run it pretty hard back and forth, and they always run it more than you think. So the obvious levels, these two are pretty obvious. These lower ones at the 215s and down to the 175s are definitely levels to buy against. Just not as aggressively, because if you get that far down, it could really keep going to the downside. And if they keep going past that, just look to buy against the 100s and the 26,050s, just not as aggressively. And if it starts trading up from there, if it runs it all the way down to 26,000, start trading back up again, I would look for shorts against these upper areas until I get up above the 215 again. So that's the when I say going back range bound, that's kind of what I mean. So if it goes down below a certain level, you take off that long bias, and then you're looking at if they start trading back up, potentially fading edges again, if you get too far down. Now we are in earnings season, so we have earnings coming out. I have not checked what the earnings are on the tap, but it's yes, you can check the financial news for that. They'll come out after the close, or some of them before they open, and you'll see reactions in the market. So I'm going to be holding my breath, waiting for the big text to come through and see how the AI play is coming through. If the revenues versus investment on the AI stocks really justify what they're doing. If that comes out as a positive in this earnings season, we'll see this market keep going. That would be the AI trade driving this higher. All right, so pretty straightforward stuff to get started this morning. Traded from the long side to get started, and we know when to change our bias. On the bond side of things, it's just not doing anything. pretty tight range on the bond. I haven't tried to trade this. When it's tight like that, it's really difficult. And you had to be right at the edge, and you had to be patient because you may be sitting there for a while. So I haven't traded the bonds at all. And still looking at it. So I would look to buy against this lower area, the 14.224. I would look to sell against the 15.16s, around about here right now, and against the 20s. Reason I wasn't put on a trade right now is just because it's in the pre-market. So it's just not a lot of activity. So you can see a nice formation like that without it really doing much. And they could just, as the open kicks in, it could take off in a direction. So that's why I don't usually try to trade those overnight. But definitely looking at as the session kicks up here now, if they start taking out that 1402s, I would going to stay on the short side. If they start trading above the 20s, I'm going to stay on the long side. See if I can take it on the upside. It could just probe another level up or down, so I'm not going to be too excited about it. There's nothing really there to drive the bond market in a big way either. So that's the bonds, pretty straightforward. Probably not going to pay too much attention to that today. Not much to say about the cryptos either. They have pretty much where they are. I'm set up these little domes as well, so I can get a good sense of the bid ask and the books and how they move. But I haven't done much in this. So I have silver on the top left, oil right below it. Then I have Bitcoin and Ethereum on the right side. That's kind of what I got up there. So Bitcoin and Ethereum, you trade with they kind of follow, at least Bitcoin kind of follows the NASDAQ a bit. Silver tends to be correlated to the NASDAQ a bit as well, if interesting enough. And oil is just trading like oil does. So if you can't trade the full-size oil contract or even the micro oil because it moves too crazy, then you can trade this one. It takes 10 cents a tick instead of $1 a tick. So it's even smaller than the micro oil. All right, back to the ES and the NASDAQ, and then let's see where we're at. Everything is kind of in a holding pattern. We get news in about 10, 15 minutes, 12 minutes, sorry, 12 minutes. And we'll see how the jobless claims number and the Fed manufacturing comes out. But as I said, none of those numbers I don't think is really going to drive the market. It will be more in the bigger question is really as the day session kicks in, are they going to try to knock it down or are we going to see continuation? That's going to be the big question. And if they start knocking it down, that could be an early short trade for us, all right? They start knocking it down, could be a nice shakeout kind of a trade in there as well. But I wouldn't be super aggressive on it. I would let it reveal itself. If you're late on that trade, that's not bad. It's better to be late on that pullback trade than it is to try to get too aggressive on the short side and keep getting run over as the market trades higher. So that's where we are. We'll wrap it there for now. So you're trading, guys. We'll see you back at 11:30 for the next update. And I have to say, I'm nothing but impressed by how the market has reversed everything and right back up to the highs again. Nothing but impressive. All right, guys. See you back then.